the Trading Market Technicals Morning Call video for Thursday, July 11th. Well, we did have some fireworks yesterday. As far as the numbers are concerned, end of day numbers, Dow was down about 8, relatively flat. NASDAQ up 16. Russell actually continues to make all-time highs, up 2. And the S&P up 30 cents. But that was before Bernanke started to speak. And when Bernanke came out after the FOMC minutes, and he started speaking around 4:15 or so when the markets were closed. Of course, futures are open. He just makes a total 360 on what he said in the previous meeting, and he started continually started speaking dovish and saying that he's not going to rein in any asset purchase program anytime soon. Dollar actually plummets across the board, while all of the precious metals spike higher and equity futures move higher, and continues to hold these gains in the overnight session and in this pre-market while I'm recording this. So really, really crazy. Can't imagine how Ben Bernanke just totally changed his mind like this. Now, we don't know what's going on. Is he getting some pressure from worldwide central banks that they need to keep rates unchanged? But it's just absolutely insane that he would just go do a total 360. Now, that being said, is that a game changer for the way you'd want to trade? Absolutely, right? So if he's going to be dovish and he's going to continue to pump liquidity like a madman into this market, you cannot be short the market, at least for a swing trade. Right now, day trading is different, obviously, but you can't be holding positions short while the market continues to rip to new highs. Now, this could easily be fuel to at least test the highs, if not take out the existing highs and make new highs. So we have to know what's going to happen in the next couple of days. Now, earnings season really has been quiet. We just started, so now we're going to be going into the heart of earnings season. Today, tomorrow, we have Wells Fargo, J.P. Morgan, and that's going to really set the tone on where this next trend is going to go. So if the big banks and a lot of these big companies start to miss top and bottom line, then I think you're going to see the markets retrace. And I think that's really the only thing that's going to really make this market move lower and investors and traders start to take profits here. So we need to really take it one step at a time. And like I said, we are in the summer, so we have summer trading happening. So we have the volume starts to decrease a little bit as we get into the summer months of July and August. And we have volatility starts to pick up, but markets get to be skewed, and they tend to exaggerate their moves. So that's something that we really need to take into consideration, okay? So now let's get right into into our indicators here. As you can see, on McClellan Oscillator did nothing because the Dow really didn't do too much, and S&P was basically relatively flat. But we do have some after hours reading, and we should be opening up somewhere around here into the 45-50 area, and we'll see. Now, we get a couple of big days and we start moving back up into this 80-90 area. That's going to hint to me that, hey, I'm going to be looking to short the market. Now, that's why we say we look for an entry, but we need the trigger, right? So if the entry is, example, 1670, and we get there, price gets there, now we need the price to start to roll over and take out that day's low. If it doesn't happen, that market's going to continue to go high. So you don't just want to go short the market. You want to wait for that trigger, whether it be a crossover, a moving average crossover, or a candlestick setup, whatever is in your trading toolbox. That's what I would recommend. Okay, so now let's take a look at the dollar. The dollar really got plummeted, but the dollar is extended. That's why I said I wouldn't be looking for any longs here. I do like the dollar, medium and long-term long, right? Because the relationships continue to change with the equity markets and the dollar. And I think that the dollar moves back into this area would be a great buy area for the dollar short the euro, right? Let's talk about the euro, and I keep mentioning that. Now, we're still in this neckline with this massive head and shoulders pattern. Maybe get into that 130-ish area. You can start nibbling short a little bit, looking for that anticipated rollover, because when you get back to this neckline, you're probably going to bounce one more time and then really break. Now, you could actually take a little short up in here where resistance would be, or wait for the break and then the back test with that bear flag. And then I would imagine the euro moves lower if the dollar starts to pick up steam again. Now remember, the dollar is in this retracement now. So when the dollar ends the retracement and starts to move higher, then I think that's when you want to look for that cue to short the euro dollar. Okay. Now let's take a look at gold. Now, gold had a decent pop, but now in the after hours, after Ben Bernanke started speaking dovish, gold is up pretty nicely now. So I do think gold is in a downtrend, and I think gold you will see probably 1,000 to 1150 in gold. Now, if you want to take an objective long position in this area, that's fine. You know your stop's going to be below this wick of this candle from 3 weeks ago. So that's something to consider. Now, take a look at USO. I get a lot of calls. Hey, you know, the USO, what do you think? Is there entry weight? No, absolutely not. The USO long trade is over for now. We need to really get back into this area here, 35, 34. You know, a gift at 34 and a half, 33 to get to this to get me interested in buying USO again. Right now, it's a bit extended and it could go even longer. But look what's happening here. We have the bullish percent NER starting to roll over, excuse me, and maybe even tagging that. But now oil is up again, so it's probably going to kiss the average and then move higher again. So I'm looking for any clues and signs to get long oil on this move lower. Hopefully we get a nice retracement. But that's what I'm looking at here. Just another internal, excuse me. The tick is actually back above zero and holding above there. So again, that's a good sign. It's a bullish sign, right? As long as you have Ben Bernanke pumping liquidity into the markets, there's no reason why this market will actually dip much lower than where it actually was right up in here. Okay. Lastly is the VIX. Show you the VIX. The VIX really didn't do much of anything. As you can see here, now it's going to probably break down again and go lower. So we had a nice little move in move lower in the markets. We had about 3-4 day move. You can see what's happening here. 1, 2, 3, 4. And then we rallied for about 12, 13 trading days consistently. And that's just right now what happens when you're in this bullish type of market. And that's going to continue unless there's a major catalyst. And there is, and I do think that China will be a big catalyst. But you're not going to wait for that to be short. So you want to just follow the trend of the market, get paid trading the markets, follow the trend. It's the easiest thing to do instead of trying to look for a spot to continually short the market. It's just it's a losing proposition. Okay, dollar, as you can see here. That this is end of day, guys. Remember, the markets in the after hours in equities and the futures, they're all big time up. 5, 6, 8 handles. So we're going to get a big pop up, and we'll see where we go. We can get a gap up and run too. So that's going to be interesting too this morning. And I just want to look at the SPYs. Here's the area where I'd like to get short. I think we're going to break back above it. So that entry will be negated, and I will not be doing anything on the short side. And that's why we always look for a trigger, right? So the next spot really would be the high, a test of the high. If we test the high, and this market really gaps up here with a big engulfing candle and just runs all day with big volume, I'm not looking to short anything. I'm looking to buy pullbacks. Okay, so this is going to be taken away by the end of the day today, and we'll see what happens tomorrow morning. Here is the diamonds. The move up here really wasn't anything really to write home about. As you can see, we have all these little doji candles, spinning tops, and now we want to see really what happens here after today. Today and tomorrow is going to set the trend going into the rest of July. Now, of course, if earnings season really starts to deteriorate next week, then all bets are going to be off to the upside. And that's what we want to do to take on more risk. Right now, you want to reduce your risk, reduce your share size, and really let the markets come to you. 2, 3, 4 days of decent gains you're going to make the month. Okay? Transports. Head and shoulders pattern, I'm going to remove that. We did get our target right up in here. So now transports really didn't do much. Remember, oil is at 107 now, all right? Now, above 107, 108, 109, 110, I think you're going to get a little bit of pressure on the transports. We're not going to see that yet because we have this euphoria now of buy everything, but I think you're going to see a pressure on the transports. We'll have to see. We'll have to take it one step at a time. It's like the interest rates. when they start to rise, you got to be careful. Right now, it's a non-event. Even though interest rates have risen well over a point in a month, it's still not a bother at the moment. Now, here's the Russell. Russell, again, all-time highs, and this thing just continues to power up. Good for a good gauge of risk. Risk on. They want to go and put into money to work, and more speculative. So that's something that we're looking to and considering here. Okay, Goldman Sachs really hasn't done much of everything, but we'll see what happens in the next couple of days with the banks. Same thing with XLF. We're just hanging above you. As you can see, we had an inside day. Most of the day yesterday was just basically built on a consolidation day. And then, of course, that little wild bump and run here after the Fed spoke at 2 o'clock. Okay, Apple really hasn't done much here. We'll see what happens. I think here, if you look at this area, and I just wanted to show you here, right, we have a little bit of a downtrend line here, right? And that's coincide nicely with the 50-day moving average and, of course, the upper end of the Bollinger Band. So this is something that we're going to be looking for. If we break above here, that's going to give us some bullish symmetry and consolidate above this area. Then I think we'll have a good test of the highs at 470. But if we fail and break lower, then I think all bets are off. And again, right now, to me, I think Apple's just a day trading stock. That's all it is. Lastly, the Qs, guys, as you can see here, did quite well. Today's going to be interesting. We'll see if we get a gap and fade or a gap and run. That's going to really set the tone. Again, we do have a couple of big banks reporting, Wells Fargo, JP Morgan, I think tomorrow. So let's see how they come out and what they say. I think they're going to talk. They're going to come out with some good earnings. Rates have been rising. That helps the banks. They borrow from us and then sell it back out to us at higher interest rates via credit cards, mortgages and lines of credit. So I think the banks will probably set the tone for another move higher, but we'll see what happens when the tech companies report next week. All right, guys, have a great day. Be safe out there. Remember, reduce your share size, reduce your risk right now. Let the markets come to you before you. Don't force anything. It's not really worth it. You don't have to trade every day. Cash is definitely a position, at least in my eyes. All right, have a great day, and we will speak to you tomorrow. Take care.